Okay, so we've seen how great the iZone sharpshooter system works for trending. And you might say, hey, that was great, love that, but hey, not every day is a trending day. You showed me these great examples, but what about the chop days? And I already showed you several times where following the iZone sharpshooter rules, making sure everything lines up exact, will keep you out of some bad trades or out of some choppy times. But how can we, what about chop? How can we actually take advantage of chop? How can we trade chop? Well, I want to show you that here. When we've got two eye zones that are really close together and they're straddling some very powerful levels, there's a way we can take advantage of them. Let me tell you about two other indicators that are on your template. We haven't talked about these yet, but one indicator is called the ICE indicator. Okay? Now, basically the indicator are these two lines here, a blue and a red line. Now, ICE is spot on for acting like very powerful magnet levels, okay, historical magnet levels. All right, and if you notice, what do I mean by magnet levels is you can see as the market is coming down, it comes back up to this level, comes back up to this level, does break it, hits this level, comes down to this level, kind of teeters here, comes down, is drawn back to this level, okay? And usually requires a lot of volume to actually break through one of these levels. But we know they're very powerful magnet levels where the market can be drawn to and then at times kind of bounce there or consolidate there. Okay? And one other level is also called deviation levels. This is another indicator on your template. Okay, and I'm not going to spend a whole lot of time on all these. You can get more details of them on our website, but just so you have a basic understanding, deviations are basically the expected movement of the market. Okay, these are not historical deviation levels like what has the market historically done. These are expectations looking forward based on the IV, the implied volatility, the pricing of options. It's kind of like the market putting its money where its mouth is. So they're not historical deviations, they're looking forward. What does the market say that the market's going to do? Okay, and in a nutshell, you basically have settlement, you have -1 deviation, -0.7 deviation, -0.5. Up top here, you'd have plus 0.5, plus 0.7, or plus 1. Okay, and the markets would normally hit, one deviation about 70% of the time. And if it does that, it's only about a 33% chance it'll go on to a second deviation and only like a 0.3 chance of a 3 deviation. But anyway, not to get too technical about that, but again, these are very powerful levels. And if you notice here, see where the market was. Settlement is where the market settled the previous day. It's coming on down here to 0.5 deviation. And as it's coming down, what does it start to do as it gets towards this 0.5 deviation? Kind of starts to pause there and tweeter there and bounce around there at that deviation level, right? Then it breaks on through, comes straight on down to where? 0.7. What does it do? Kind of just sits there a little bit, right? Now, some days the market may reverse at these levels. Some days with high volume or whatever, it might shoot straight through them. But a lot of times you can expect a little bit of a bounce there. Okay? So if we're looking at these two indicators here on our chart and the market is kind of bouncing around at those levels, what do you think, for example, like right here at this level, what do you think it's bouncing up to? What do you think it might be bouncing down to? What may it be bouncing up to? What might it be bouncing down to? So, how can we trade chop? All right, let's take a look here at this chart here. Notice this red line here is an ICE level, okay? And again, we know that sometimes when the market hits those levels, it can bounce around a little bit. So when you have the market straddling an ICE level or straddling a deviation level, and you have very close squeezed together eye zones here. You see that? We've got our red and green zones really close to each other. Some of the examples I showed you earlier, some of our trend trading, maybe we only had this one or this one. Maybe there was a good amount of distance between the different levels. But when they're squashed close together here and straddling an eye zone, or I'm sorry, straddling an ICE level or a deviation level, we're expecting a little bit of a bounce. And where do we probably expect those bounces to be between? when they're real close together like that. Exactly. Expect them to be bouncing off those ice zones that are close together. Now, a lot of people say, hey, I hate when the markets go choppy. Chop will kill you. Chop is terrible. There's no way to trade chop. Okay? I like the big trends. I want a big 40-point move and make 400 bucks. I don't want to deal with chop. There's no way to make money in chop. Well, is that true? Is that not true? When you've got I zones squished, now I'm not talking about just any random chop. I'm saying when this lines up, when you've got I zones squished close together like this, straddling an ice level or a deviation level, we do have a chop trading system here built in with the I zone sharpshooter system. Now the rules, the entry rules and exit rules here are completely different than the trending rules. Okay, we're not looking for everything to line up the same color or anything like that. All we're looking for is when you see the market starting to get choppy like this, close I zone straddling an ice or deviation, when you're bouncing off, for example here, when you're bouncing off one I zone, all we're looking for here is bouncing off an I zone, and we're looking for the trend catcher. Right here we get a cyan trend catcher arrow that says heads up, maybe heading down out of this I zone. And then the very next bar, what do we get here? The confirm down red arrow. Okay, we're not worried about all the other indicators lining up. We're not even worried about this bar color or trend R lining up. All we're looking for in this chop situation, if the situation is set up properly, straddling a level, close zones, when it's bouncing off a zone and we get a trend catcher arrow, soon as this bar closes and we have the confirmed trend catcher, 3 ticks below, we're entering for a quick chop trade. Okay, we're entering and we're going to take it down, and when the market gets down to this other I zone level, we're getting out, we're exiting. Okay, the market's come down, and what has it done? It's hit this green level here and it's starting to bounce. We get a cyan arrow saying heads up, and then we get a what? Confirmed arrow going up. When it breaks that by 3 ticks, I'm going to enter. I'm going to take the trade up, and as soon as it hits this I zone, boom, I'm going to get out. Right? We've got another arrow here. It's bouncing off this one, going down. When it breaks it by 3 ticks, which wouldn't be till over here, I'm going to enter the trade and I'm going to take it down. And as soon as right here, as soon as it hits this I zone, boom, I'm going to get out. Yeah, I could have stayed in and it kept going a little bit before it turned around, right? But better safe than sorry here. Okay, I'm not trying to go as long as I can go and wait for it to come back up and hit some stop. No, I'm taking it when I got it confirmed off of this I zone, taking it down to this one and getting out. Why? Because I'm expecting a reversal. And what happens? It's down here at this green zone. We've got a heads up cyan. We've got a confirmed green saying go up. When it breaks that by 3 ticks, I get in. I'm taking that trade up to right here, this I zone level, getting out. It's bouncing off of this one, cyan down, red confirmed down. It breaks that 3 ticks. I'm taking that, boom, getting out right here. All right, does that make sense? Okay, because again, if it's straddling one of these powerful levels like deviations, what am I expecting to happen around a deviation? You can just see it. What am I sometimes expecting it to do on some ice levels here? I'm expecting it to kind of bounce up and down. And when those I zones are squished close together, that's a good estimation of where it's going to be bouncing off of. So yeah, it might go a few ticks more and I can get a little more. Right here, it might have gone I could have gone a little more. But I'm expecting bounces, so I'm just taking the quick turnaround, boom, get out. Turn around, boom, get out. Okay? So I'm not worried about anything else. Don't overcomplicate this. Don't start asking questions about, well, does the trend flip have to line up? What about trend R? What about the bands? What about with the chop trading? Different rules. Don't worry about any of those other indicators. All you're worried about is it straddling a deviation or an ice level? And are the I zones squished together? When it's bouncing off of this I zone and I get my trend catcher confirmed arrow, 3 ticks later I'm entering, I'm getting out when it hits the other I zone. Okay? When it bounces off that one, I get the confirmed arrow, I'm entering 3 ticks, I'm taking it up and getting out at the new I zone level. That's it. Okay? Now, where is my stop? So we know if I get the trend catcher, if it's bouncing off this I zone, I get my trend catcher arrow. At the close of that bar, I'm entering 3 ticks later. That's where I enter. And I'm going to get out and take profit here. But what if I'm wrong and it goes against me? Where am I exiting? Where's my stop? Well, if I was wrong and it went against me and it came up and broke through this I zone level and broke this I zone level by a few ticks, I would get out. So my stop is up here at the top of this I zone level. So if I'm entering right here and it goes against me, my stop is up here at the top of this I zone level. My take profit is down at this one. So when it's bouncing off this green, I get a cyan setup, then I get a solid trend catcher confirming. When it breaks that by 3 ticks, I enter the trade. If it goes up and hits this, I'm going to take profit. If I entered the trade here and I was wrong and it came against me down to the bottom of this I zone level and broke it by, say, 3 ticks, I'd get out. So that's my entry, that's my take profit, and that's my stop. Okay? Now some people say, oh, I don't like those shorter trades like that. I mean, you can't make money in chop. Well, not just in all random chop, maybe not, but when it's set up like this, squashed close together, straddling those zones, I mean, if you're trading something like the NQ here, or even if you're trading, some of the other indices, $5 a tick, $10 a tick, I mean, boom, you pop it here and you get a few points. Boom, there's $100. Get in here, boom, there's $100. Get in here, boom, there's $100. Boom, get in there, there's $100. Boom, get in there, there's $100. I mean, you got 100, 200, 300, 400, 500. There's $500 right there in chop. Was that a big 40 or 50 point trend move that you love so much? No, but it's the same amount though. Okay? And you want to have multiple plays in your playbook. You want to be able to trade trending days. You want to be able to trade choppy days. Okay? So I've showed you trend trading, and now you see chop trading. We'll talk in another video about how you can add on some other scalp trading to the iZone sharpshooter system. So again, just one of the things that make this such a powerful system is you've got all these different ways to play the market conditions all in one system, all on one chart. You're not having to have multiple charts and a ton of different things you're looking at. It's all on the same chart. Okay? So that is chop trading.